now we go to problem 1. Problem 1 is a list of financial statement items are below. Our job is to indicate whether each item is found on the income statement, on the statement of owner's equity, or on the balance sheet. Okay? So let's just real quick talk about what is the income statement? What does it comprise of? Revenues, expenses, period. Okay? I'm going to give you a secret about knowing if something's an expense. Guess what? It has the word expense on it. Isn't that great? Get it? Now, the statement of owner's equity consists of beginning balance plus investments from the owner minus withdrawals plus a net income or minus net loss. That's it. What's a balance sheet have? Assets equal liabilities plus equity. I'm going to give you another hint. Let's talk about the kind of assets. Economic resources that will have a future benefit. We have cash. We have various receivables. We have buildings, equipment, land, furniture, and fixtures. What are liabilities? Yes. And guess what? A lot, not all, but a lot of liabilities have in their name. Payables. Okay? Accounts payable, notes payable, mortgages payable, taxes payable. I'm just trying to give you hints that help you. Okay? Make sense? What? So, a list of financial statement items follow. Let's talk about them and see, are we going to put them in the income statement, the statement of owner's equity, or the balance sheet? How about utilities expense? Income statement. A building? Celeste should have that one. Balance sheet. Owner's capital. Okay, this is a tough one, but let's go and look at an income or a balance sheet. Go look at page 9. Which one has capital? It does. Now, page 9. It does have in the bottom, it's got the beginning balance and the ending balance called capital and the owner's equity. But really, where do we actually show that figure? On the balance sheet, don't we? Do you see that? Guys, I'm going to go to this page real quick so you can see what I'm talking about. Do you see here? Do you see how while the owner's equity shows a beginning capital and an ending capital, we ultimately use that for our balance sheet, don't we? Do you see that? What about net income? Where do we show that? Where? It comes from the income statement. You're right, it comes from the income statement. And where else do we use it? Owner's equity. Perfect. What about land? Balance sheet. What about equipment? Balance sheet. What about revenues? What? Yep. What about accounts receivable? Remember I was talking about assets and I was talking about liabilities? And some assets have a word after them that you know it's an asset. Receivables. It's a benefit. It's an economic resource with a future benefit. Accounts receivable are monies we should be receiving from customers, but we haven't received them yet. Okay? So accounts receivable is an asset. To familiarize yourself with that, I want you to go this week I know there's on page 6, and look at that. Other assets, inventories, land, buildings, equipment, money that customers owe to the company are called accounts receivable. Okay? Next, what's accounts payable? Balance sheet. What's rent expense? Income statement. What are withdrawals? Owner's equity. Fees earned. Income statement. It's a revenue. Cash. Balance sheet. Supplies. Balance sheet. Wages expense. Income statement. So what I'm going to do is I'll pull this up so you make sure you have them right. Do you see here? Owner's capital and net income, or owner's capital is the balance sheet and the owner's equity. Net income, the income statement, and the owner's equity. All the others are just one. You see that, guys? I'm going to get myself another drink here real quick. Any questions on that one? So, which of the statements is most closely associated with profitability? What do you guys think? The balance sheet, the income statement? The income statement. Okay? Now we're going to go, am I going too fast for you? We're going to go to P2. Our job is to do what we did in that other problem. It's to put in the missing figures. So how about this? What do you think set A, you two guys take? Set B, the middle row takes, plus Sarah. Set C, the back row takes. I'm going to run and get a drink, and then we're going to have it figured out, okay?
What page is this?
This is page 30. Yeah. See, you see the page right here? 30. Are y'all doing okay?
The other one was,
Are you friendly?
yeah.
Are you lost?
So we had this set B.
You're going to do set B. The two of you work together. This is kind of like what we were just doing. Yep. You're going to go. Where can we start with here? Okay?
Between 1970.
Where can we go?
Income statement?
And you can pull the 300 up
Yeah,
to
okay, so
B,
let's
but
see.
in income.
We have the net income.
800 for expenses. 800, right? Yep. Total assets. E would be 3,000. F would be 4,600. Right? What's the total assets? 4,600. Because equity with owner's capital. Yeah, because the owner's equity is 3,000 plus liability is 1,600, it would be 4,600 for assets. So D is 46. D is 46.
Yeah. Yep.
Owner's capital. Would be 300, or 3,000. Right? Okay, so owner's capital is 3,000, right? Yeah, because it's equivalent of the owner's equity, right? Is that correct?
I'm sorry, I wasn't even paying
Oh,
attention.
owner's capital is equivalent to the owner's equity
Exactly.
in this case.
Exactly.
In any case. Basically one and the same, so F is 3,000. D is 4,600. Oh, sorry. F is 4,600, D is 4,600.
You guys tell me when you're ready, okay?
Right? What did you get for F one? So F 4,600, because you would take the 3,000 plus the 1,600 would be liabilities and owner's equity. Owner's capital is the same as owner's equity. Yep. And the total assets would be the same as the total liabilities and owner's equity. Yep. That's what I got. So I can just take a picture of this and email it to you?
No. Put it to the Dropbox. Do you have it?
So I have to send it to my email, download it on my computer, and then upload it onto the Dropbox.
Do you have an iPhone? Okay, then that's how you'd have to do it. Otherwise,
Oh, I could probably go on the phone.
exactly.
I have a tablet. I have
Yeah, that's
I
what
have
you
a
can do.
big,
Yeah.
tab 4, I'd probably just take a picture with that, and I can just, bada bing, bada boom. My handwriting's not that great. That's okay, right?
Nope. You know what? If you can read it, that's all that matters. So as we move on,
Yeah. Hopefully 1,000, owner's capital should be 25. Maybe 26. About 26. I thought that was 500. So you just add put J, should be 0.6. Would there be no withdrawals? No withdrawals. Net income is 8 to 1600. 52 until 36.
What are total liabilities we are expenses? So, total liabilities.
3600.
So here, yeah, liabilities are expenses. So that's all we would put in expenses, so we would put 166R.
Y'all ready? Okay, let's look at, are y'all ready? Set 1. You're not ready or you are? Okay, we'll wait a minute. Or do you want us to help you? Okay, let's look at set 1, guys. Let's look at set 1. What is it that we have that can assist us in completing this problem? In set 1, we need A, B, C, D, E, and F. What do we know? Again, look at our statement of owner's equity here. We know our ending balance, don't we?
Right.
So if we know our ending balance, we can figure out what our net income is, can't we? If our beginning balance of owner's equity is $2,900 and we have withdrawals of $200, with our net income $300 would be our net income. So if C is 300, what's B going to be? Is 300. What does that make A? 800. We know what F is, don't we? Because if liabilities are 1,600 and owner's capital, E, is 3,000, which is the ending balance from owner's equity. What is F?
4,600.
4,600. If F is 4,600, what does D need to be? D also needs to be 4,600. Remember, assets equal liabilities plus owner's equity. Make sense? Okay, guys, let's look at set B. What can we kind of decipher with set B? We were given the net income, great. So if the net income is 1,600, then that means H is 1,600, doesn't it? What does that mean G is? Good. G would be 6,800, wouldn't it?
Oh, it's got to go to the top side.
Yeah, G would be 6,800. Do you see revenues? If you're going to have net income, your revenues need to be greater than expenses, don't they? So we know if H is 1,600, then G is going to be 6,800. Okay? Let's look down at our balance sheet. What is this balance sheet telling us? The assets. If the assets are 31,000, what else equals 31,000?
Total liability.
Yes, total liabilities and owner's equity also needs to be 31,000, doesn't it? So if total liabilities and owner's equity, L, is 31,000, what would that make our owner's capital? 26. So if K is 26, what's J? 26. And then we can calculate what I is going to be, can't we? Guys, do you understand the importance of this problem is to help you understand the relationship among these? That's what we're doing here. If you can spend the rest of the week working on understanding these relationships, I can only spend so much time in this class, but you really need to spend the time cementing this in your head. Does that make sense? To get this. So, do you guys have set B all covered for you? Okay, so set B is G is 6,800, H is 1,600, I is 0, J we knew is 26,000 because since they gave us our assets of 31,000, we knew our total liabilities plus owner's equity also had to be 31,000, which gave us our owner's capital of 26. Make sense? Now, let's take a look at set C. What can we do here with set C?
We can figure out expenses.
We can figure out expenses. What are our expenses, guys? 160. M is 160. We also, they gave us our net income. So what do we think N is going to be? 80. Now, guys, do you see down here in the balance sheet, they gave us our owner's capital of 380?
Yeah.
What does that make P? 380. And we have our net income of 80. So we have our beginning balance of 340 plus our 80, that's 420. And our ending balance was 380. What's that going to make our withdrawals? 40.
40.
Perfect. Now, the other thing interesting here, guys, do you see on the balance sheet it gives us our owner's capital of 380, and then it also says total liabilities and owner's equity 380? What does that tell us our liabilities are? 0. And what does it tell us our assets are? This is the kind of problem you're going to have. Okay, I want you to know this. It's not to trick you, it's to help you really understand the relationships. Okay, guys? Let's do problem 3. Okay? Are we good? Am I rushing you too much? Problem 3.
We have to, what was that number 2?
Problem 2. Oh, don't worry. Don't worry about part 2 of problem 2. Problem 3. Fuel Design's financial account follows. The company's just completed its 10th year of operations, ended December 31st, 2014. Guys, it gives us all these accounts. Our job is to prepare the income statement, the statement of owner's equity, and the balance sheet. It's telling us there are no investments by the owner during the period. Okay? So we don't have to add anything here. Make sense? So, guys, let's start with the income statement. Which of these items would include revenues? The ones that say revenues. So what do we see here?
Commission sale
Revenue? Yes. Is there any other revenue? No. That is it. So your revenues are going to be commission sales revenues. I gave you a hint about how easy it is to decipher an expense. It has to say expense. So what are going to be some expenses? Commissions expense, marketing expense, office rent expense, supplies expense, telephone and computer expense, wages expense. So I'm going to pull this up so you can see how this should look. Next week, I will make sure and have for you the worksheets. I'll print them out so you guys can have them on hand here. And I'll also try to have them online, so if you want to do it online and submit it. Do you see, honestly, if you think of revenues, always say revenue behind it, and expenses always are going to say expense right now, how easy it is to figure that out? Yes, no? Tell me when I can move on. I promised you we'd get out on time. I've got 3 minutes. Are y'all willing to stay, or do you want to get out? If you need to leave, feel free to leave. This is going on, okay? So you'll be able to pick up on everything we're doing here. I'm not cutting you out just because you left, okay? One thing I want to say, during the week, even though we aren't meeting, I will have a section in the discussion board to ask questions. I'll have problems if, you know, I'm just going to make it an opportunity for you to ask questions, and I can answer them online there, okay? So your net income here should be $79,200. Tell me when I can move on.
When he sets this up, if we do like an Excel
Perfect.
format, I would just have a question. With the expenses, can we put it into a parentheses as a negative? Or would
You can. It's best, let me just start you with good habits. It's best not to right now.
Okay.
But what you can do is in your Excel, you total it, like we're doing over here. You total it. Okay, one thing I do want to show you. In your Excel,
Yeah, 'cause I don't like the.
I have the forms in here, okay? So if you look at this class, I have a work template set up for you, okay? If you go into this template, I think it's already in here, and it's already going to be set up for you, and it should automatically subtract them for you if you use this template I provided for you.
Will you explain like how the revenue was further to the right than that? I totally forgot why.
No problem. And guys, I'm not going to get you too worried about the various columns. This is just the format we use to present the financial statements. And so they do that to line up the columns and make it all flow smoothly. If you use the template I provided for you, it'll automatically do it for you. Do you see that, guys? And you should be able to even get in here what your revenues are. See, sales revenue or commission sales revenue. See what I'm doing? They should automatically highlight them, although someone once told me they weren't working. So they do that just to keep them in line. And like in this case, you put your expenses in here, the total expenses go over here. So it's a smooth flow of your revenues minus your expenses show your net income. Does that make sense, guys?
Computer age.
What I'll do is I will we'll finish this, and then I'm going to let you go, and I will make sure and have them up tomorrow. So your net income we completed. Let's talk about the statement of owner's equity. What do we start our statement of owner's equity with? Do you see how we are completing a financial statement for December 31st through 2014? Do you see it gave us information of the owner's capital as of December 31st, 2013? Isn't that what we begin with? So we will begin with the statement of owner's equity, owner's capital at the beginning of the period. We add to that the net income, don't we? Now, if we go back here and look, it shows withdrawals of $33,000, doesn't it? So we're going to use that figure in here to show less withdrawals to come up with the owner's capital ending balance as of December 31st, 2014, aren't we? Make sense? Of $110,500.
How do you have to set it up with a subtotal like that?
It's ideal, or yes. We'll start by, if you didn't use the word subtotal, and let's say you took owner's capital, net income, less withdrawals, and you have owner's capital, that's fine. I just want you to arrive at the bottom number and make sure you've included the things. Okay? So let's move on to the balance sheet, guys. You'll be able to go back in this lecture and just pause it there. Guys, let's first look at assets. Do you know how a balance sheet we start with assets? What are some assets in here? Cash. Accounts receivable is an asset. Is equipment an asset? Supplies is an asset. I think that's everything, guys. What are liabilities? Payable, accounts payable. No. What's an expense? Who wants to smack them? Commissions payable. Is that a liability? How about, guys, you see, whenever it says the word expense, what do we do with it? Expenses are on the income statement, right? As an expense. Guys, please understand, you've covered so much, I'm giving you a hard time. Okay? But the word expense, what is it? An expense. On the income statement. It's not part of the balance sheet, is it? The only thing that's part of the balance sheet will be cash. Let's look at our assets. Do you see how we have cash, accounts receivable, supplies, and equipment? Do you see our liabilities only are two things? They both say payable. And where did we get our owner's equity or owner's capital? Right above, didn't we? Do you see what I'm saying? So do you see how our total assets of 136.8 equal our total liabilities of 26.3 and our owner's capital of 110.5? Does that make sense, guys? Don't worry about number 2 there, why the cash flow statement is useful. I don't care. We don't care right now. I will put number 4, whoopsie.